Hello, 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 everyone. How is everyone doing today? So we're gonna have Bob. I have to look away to get Bob on in the green room. Guest in the green room. Good morning, George. Good morning, Ramsafal. Good morning, Gary. So, good morning. Hey, Brian, welcome, welcome, welcome. Haven't seen your name here before. Thank you for joining the live stream. And then we got some regulars. Christoph, Options 22, good morning. Sashi in the house. Wow. What? You know what? And by the way, if you are joining us for the first time or new and you like to see what we're doing here, please do consider subscribing, ring that bell, and hitting the ever so popular like button. All right. Let's just, I want to find out what Bob has to say. So I'm going to bring Bob on right off the bat. But hold on. Where's my
Hold
magic
on.
Bob button? There it is. Oh, hold on. I
Hold
got to say
on.
good morning to Sterling. Good morning, Sterling. All right. Now, and Christoph, Grand Rising Christoph. Now, Bob, you're in the house. What's going on?
Yeah, I wanted to come on because I might be tied up this afternoon. I might be on this afternoon as well, but I might not. We're obviously in the quiet period, and we've got those three Fed meetings starting basically tomorrow, right? So tomorrow we've got the Bank of Canada, and then we've got the Bank of England. No, the ECB, and then we got the Bank of Japan. And throughout that whole cycle of Fed meetings, we have treasury yields on the long end that essentially, I don't want to say they're going parabolic, but the yields are rising. And if you look at a long term chart, what looks like a historic rate in the speed with which they're rising. And I wanted to point out how difficult that is for the financial system, regardless of whether the UK has a new prime minister now or not. Right. So that's really what I wanted to talk about. When you look at, for example, the 30-year in the US, the 30-year yesterday settled at 440. We've got the 30-year right now in the US at 431. Not a big deal, right? But on the 18th, let's go to the 14th. The 30-year was at 399. So 430, 399, 430, you're talking about 31 basis points in basically less than a week when you look at it net net, actually a little more than a week. And you look at it from that perspective, you look at it at 440 yesterday, and in basically a week, it had shot up 41 basis points. That's, for words escape me, that's a lot. Okay, that's a lot. And when you go look at what the effect that's having on the inversion, is people, you'll hear people say that the twos tens is now widening because what happens is the yield curve flattens or tightens, then it goes inverted, and when it goes inverted, that's like getting tighter than zero, right? Well, that's what the inversion means, and we're well off the lows of that inversion. And again, I want to point back to Mike's research as well as Cameron Dawson's research on what that means to stocks and to other parts of the economy next quarter, okay, as we come out of the inversion. So, what would cause that? Well, if you think that through, okay, you say, okay, this is good news, right? Yield curve is inverting. It's great news if coming out of inversion. It's great news if inflation is at 2% or lower. Not so great news with inflation at what PCE will probably be somewhere around 4.5% to 5%, if not higher. Um, that's, as I've been saying since I've been coming on this live stream, is the issue. Is where is inflation when this stuff happens? So inflation is obviously moderating in terms of its growth. We're in a deflationary cycle now. I'm sorry, a disinflationary cycle. Excuse me. We're not in deflation. Deflation is when prices are falling on a general level. Disinflation is when the rise in prices is falling. Okay, so prices were rising at an 8 or a 9% clip. Now they're going to be rising at a 4 or a 5% clip. That's disinflation. So it's the first step before deflation. Now, does that mean deflation is coming? No, it doesn't mean deflation is coming. It means inflation is continuing at a slower pace. So that's the issue. That's the problem. Kamal Shri Kumar, who's probably my favorite interest rate strategist and economist, put out a piece this morning. Mike, I'll send it to you so you can read it. And he basically said, thank you, Liz Truss. And he basically said, thank you, Liz Truss, for resigning and preventing the crisis from getting any worse right now. Now they'll be able to blame something else when the crisis actually gets way worse. And I didn't finish reading it, but what I think he means is that these kinds of rate rises, which this little pullback today is certainly not a reversal. These kinds of, what is that, a yield chart, Mike? So we're not even at the targets for the double?
No, that's the Dow. We still
Okay,
have
no, that's fine.
that's the Dow.
So from that, Gary says no negative statements. This is not a negative equity statement for the fourth quarter, Gary. Just again, let me be clear on something. The inversion has to come out and go to its normal shape of the curve. Okay, and then there'll be some other driver. And I've said this multiple times. I think the fourth quarter will be positive versus the close of the third quarter in stocks. So you find me along today. I'm not saying it's going up today. I'm just saying this is not a negative. Okay, you find me along for this quarter, I think. And then next quarter, you're going to have a drastic reduction in earnings expectations and earnings estimates. Mike, I'm going to send you something. I got to get it out of my computer. I'm going to send you something right now, and it'll point out something I've been watching closely. Essentially, I'm just backing up what I'm talking about for next quarter being way worse.
You're sending me email?
And as soon as I find it, I'm going to send it via email. I think it's in my documents folder.
I have to.
Hopefully I didn't send. No, I can text it to you if that's easier. What's easier?
Yeah, text it to me.
All right. Where do I have it? Here it is. So it's reaction to earnings surprises image. I haven't sent you that, right?
I don't think so.
Okay. I'm going to send that right now. Hold on. I got to email it to myself in order to text it to you. So I'll do that, which will only take a second.
Well, I'm waiting.
Anyway, you're fine me along today, Gary the golfer.
What was oh boy, there's some of these things. Real quick, while I'm waiting for that to come through. Redbook coming in at 8.2%. House price action, house price index, no shock there, contracting minus 0.7%. We're watching for consumer confidence at 9 a.m. and that would, if it's a bigger beat or miss, that's the only thing I'm really watching for affecting the market if it's way out of range. And then Richmond Fed on whether it's contraction. Fed Waller speech? I thought that was in their quiet period.
They're in the quiet period. That's not right.
That can't be right because I'm like, there's no. I won't even say it to aggravate you, Bob.
There's no look. The only thing it can be, they're allowed to do during the quiet period is academic sessions, like academic talks or conversations or things like that. He might have had one pre-scheduled from 2 years ago or something. It's entirely possible, a paid academic speech, but it will not relate, if he does it, to policy at all. It'll be something more along the lines of theory of, maybe he's like an expert in industrial building supply chains or something. It won't have anything to do with rates.
So this is what I wanted to send you. Stock reaction, earnings surprises.
It's one of the weakest ever, right? In terms of like how big the negative reaction is versus how small the positive reaction is. And we expect it to get worse this quarter. And last quarter was bad. Can you make that even bigger or no? Otherwise, I got to look at it on my screen because not
Yeah,
able to
there
see it.
is that big enough?
Yeah, that's good. So Q3 of 2020 is expected to be just as bad, if not worse. It's certainly like positive earnings surprises are not outperforming. If you look at where they expect it to be for the third quarter of 2020. So the fourth quarter is expected to be quite a bit worse than that. So that would be in Q1. And that'll force earnings expectations down is the reaction to misses and to beats. Will force earnings expectations lower because that's not what they want. Okay. They want to be able to jump over a lowered bar. All right. So that means earnings expectations still have to come down.
Yeah,
So,
we are yet into the earnings compression cycle from my perspective.
right.
So, everybody says we're coming out of something. We have yet to go into that aspect of it,
Yeah.
which
So here's
oh,
the other thing I want to talk about. Then I'll let you guys go to price action if you want, Mikey. So I saw something super disturbing, and I know a lot of you guys in here lean right. Not all of you, but a lot of you guys lean right. What is Krista saying here? Yeah, they're coming down already. We had some regular. I don't remember. I can't remember who it was. If you could jump in, somebody said their area is never going down. So there's Christo saying that home prices in North Atlanta are already coming down. Christoph the Russian is in here. Anyway, and prices here in Southwest Florida are coming down as well, although in an odd twist. Something that's helped hold the prices up was Hurricane Ian. Believe it or not, investors are coming down in droves, asking real estate agents if any of the gutted and damaged places are on the market and they're paying cash. So they're kind of like prices are down, but we're in a disinflationary cycle in real estate in Southwest Florida. In other words, prices are up less, but houses are on the market almost double where they were in May in terms of time on the market. So when that happens, it's only a matter of time before the prices start to come down. Anyway, in terms of the election, there's a pollster named Frank Luntz. And the reason I said that, a lot of you, I know a lot of you lean right here. Not all of you, but a lot of you. For those of you who know who Frank Luntz is, you would know him as Fox News' favorite pollster from years ago. And then he upset Trump, or Trump upset him. I don't know what happened. And now he seems to be the favorite pollster on like CNN and MSNBC. He's completely switched. Now he's not. I wouldn't necessarily say that he has a political position either way. I'm just saying which outlets show him a lot. So whether you're left or right, you may know who Frank Luntz is. But he's a pretty respected pollster, and he's got a really bad wig. He wears just a horrendous hairpiece. It's one of the worst I've ever seen. Anyway, he said, based on his data, and he was one of the more accurate 2016 pollsters. Okay. 2020, I don't know what he was because I wasn't watching polls. He said that election night, it will look like one of the biggest red waves ever. And then in the morning, it'll shift more blue. And then 2 or 3 days later, he thinks it'll end up that the Dems keep the Senate by the margin of the vice president and the Republicans take the House. And he said he thinks that will spark violence, like in the streets violence, because there's so many people who don't trust the way elections are run. So that worries me for the stock market. That could be one of the things that triggers me being wrong about the fourth quarter being higher. Depending if Frank Luntz is right, that is a Six Sigma black swan with purple hair. Okay, it's really out there. But he said it's because of the way that votes are counted. In-person votes are counted first. Absentee ballots are counted third. Mail-in ballots are counted second. They classify mail-in versus absentee different. I don't know why. They both come in the mail. But that's the way they're counted. So in person is first, which he said leans way right. Absentee is third, which he said also leans right. Mail-in leans left. Absentee's a lot of military and transplants who kept their original address. So yeah, that's your black swan prediction for this morning. That's it.
All right.
Oh,
Fantastic.
there's somebody talking about DeSantis in here, Mike. I want to show you guys something really funny. You ready?
What's
Hold
that?
on. I'll be right here. It's right here. You can still hear me.
Yeah, we just see the chair. The chair of
Wow.
Bob.
This is a mailer that came. Can you see this?
Hold it up a bit more. I see DeSantis. What is that? Oh, Top Gov?
Yeah.
That's pretty funny.
Now, in fairness, he was an Air Force lawyer or something, I think.
All right.
You see
Well,
it?
we got the DeSantis take.
All right. That's just a mailer that came. It's not an endorsement on my part. Although if you talk to me off the air, all right, I got to go.
All right. I'll talk to you
I
later.
may be on this afternoon. I may not. I'm not sure. Mike, I'll let you know.
Just let me know so I can put it in the title or with the correct
All right.
photo. All right.
See you guys.
All right, everyone. Thank you. Thank you. Thank you. So, real quick, let's get back to a few things. Let's get back to flushing out the stuff we already talked about, the economic calendar, stock market. Mixed, but starting to bounce back going into the open. Still, the 75 basis points, 95%. Do keep in, there's a pretty big gamma wall now at 3,800. Do keep that in mind, and we're right in the middle of neutral mode. Why do I bring all that up? Because we got some key support even on pullbacks to 3,800. By the way, UPS beat, GM beat, Coca-Cola beat. GE is the master of doing some interesting accounting. So I'm not going to comment on that. But by the way, some of these beats, the revenue, like UPS revenue did miss. UPS was up, but then started pulling back. I've not looked at it in a few minutes. GM revenue missed. Earnings beat, revenue missed. Coca-Cola beat and beat. So still, some earnings aren't that bad. Coca-Cola still able to pass. I haven't heard anything else out of them because I was prepping for this and the market open, but still able to pass a lot on to the consumer. Why did I bring up 3,800? We got the first cross. We do not trade crosses in here, but we have key support even back at this sloppy head and shoulders neckline, first cross, and you have the gamma wall back there. It's just below 3,800, but you have the rising rotation zone and you have some pretty major support. Now, we bumped into 50 yesterday. Going to keep watching that for key resistance. So far, it's just a sideways correction holding the top of the rotation zone. Let me bump this down a little going into the open. Right around this 37.94. We do have some key price action. If we did drop through there, I am focusing on the bottom of the rotation zone, about 37.60 to 37.66. The only thing that would tip me very short-term bearish is, and this is almost off the table, 37.36 on a 4-hour closing basis. It can be done on a 1-hour too, but that would just be a pullback to the mid potential 3600s. By the way, that other potential bigger double top is off the table. So, again, this is a sideways correction so far. Remember, sideways versus pullback correction. This is sideways after pausing at the 50. So we should still technically see higher prices for everybody who just wants, is it going up or down? Well, we should still see the higher prices. If we get the pullback with the open, it's still not a major pullback unless we trigger that mini double top. The NASDAQ, This, remember, wasn't with that spike down, but if you start getting back below, especially 11.2 at this point, then we could see the pullbacks back to 11, which is virtually the end of the clear path. So that's the only thing that tips me more bearish, not just for today. Other than that, trying to ride up against this next 11,550 harmonic area and the declining 200 on the 4-hour through there. 11,670 is the next key target. Key support, if we do break down the open below about 11,430, then I'm watching the pullback closer to 11,326 into that 4-hour rotation zone. But unless we even got a close, and I'm not talking a 5-minute close below that 4-hour rotation zone, I'm talking at least a 1-hour close. It's just be an ordinary pullback within a sideways correction. Dow, after pausing at the second target, holding the 4-hour rotation zone, we start breaking below about 31,400. Then I'm watching for the pullback closer to about 31,100 on the bigger pullback. Minor will be 31,200. I did see at least somebody was on the buy side for the Dow micros. I think that was you, Christo. But we should still see, and again, when I list the bigger term patterns like the Dow, this does not have to happen today. Don't mix your time frames up. So any pullback would be for a potential daily pullback, but we do still favor 31,971 price action in the Dow, and key on a closing basis is this 32,142 basis. Russell, nothing. Absolutely nothing. This is pretty much done due to this extended sideways correction. It's caught between key support and resistance. Resistance is coming out. Now, you're going to need this follow through with a close, but your minor level is about 1756, and key support for the breakdown is about 1747. But I need, if it does break above or down from these levels, I need a retest and then at least holding a 1-hour close above that. DAX, nothing's really changed just yet. We still have bearish pattern, technically not even close to being triggered. The bullish pattern is triggered. Should still see a push higher probability-wise. Notes, after hitting the first target, done. Little corrective rally here. I have not now. If we close within the rotation zone, I'm watching for the bigger pullback to the 50% of this last sell-off and about 111.12, which would take us to the 50% and the other side of the rotation zone. That's the upside play right now in the notes. Dollar index breaking down, which is supportive of the markets moving up. If we really get some momentum, not just for today, but my next key level is 110.48 roughly, which is the rising 50 and the 12.5% harmonic. It'll be interesting to see if this rolls into a bigger pattern, but we're getting a fair amount of dollar pressure at this point. VIX still leaning slightly bullish on this pullback, but I need to really start seeing us breaking below this 29.25 and retesting 28.50 before it gets more aggressively bullish. Crude, caught in the range, still have that potential double. That's about it that I've covered before. Let's just peek in on some other stuff. Yen still caught, but breaking down from this now with, again, the dollar weakening right now. So that's going to, unless this can snap back above 148.74, you do have some dollar pressure from the yen. Dollar pressure on the euro breaking to the upside. So I mentioned 99.40, and then we get through there. Next target for me is 99.80, and pound also. So across the board with the big boys, we're getting some dollar pressure. So this should keep reinforcing, and unless we see a quick reversal into the open. If we don't see a reversal in the open on these currencies, I will watch the European close to see what happens with those on the European closed spiders. Again, nothing's really changed from yesterday. Still, your next key level on the rally is 382.18. Key pullback level on the daily is 375.50. Everything else is very short-term trading, but on the break right now, even sitting above this key resistance becoming support. So your minor pullback level on any weakness would be utilizing right around 377.95, 378. For the Qs, also the next target area 284, 284.18. Minor that you can utilize is about 282.15. Or 28. I go to, let me bump that level up just a hair. 280, yeah, right around 282.15. 282 to 282.15. Your key support now coming in, your major support all the way at 276. Your minor support coming in at about 278.50. Next target, again, 282.15, then 284 area. So that's where we sit with all that for the I know we're open. I'm just getting through some stuff right now. And then I'll check back on the markets. Tesla, remember you still have a gap fill. Do not ignore 218.50 though on the rally before the gap fill. The target's the upside. Let's get down to some shorter term stuff. Do mind this little mini double, which is still in play if it can't get through. This yesterday full gap fill to the close is still in play, which is 214.52. If it does get the rally on, you have that key area 218.50. Oops. 218.50 and then the 222 area. Let's check back in at the S&P. So far, looks like we're going to retest the high area from yesterday. We have a fair amount of resistance up here. So on any break, if you want to see this level hold, okay, you don't want to see from the bullish case of at least to start breaking back below about 38.08. Let's check in on the tick. The Mr. Tick. So far, not overly strong open. I'm going to be just watching this zero mark to see how we're reacting. Other than that, going to be watching for the slight up move. Let's just jump back at the put in there. So now we're starting to try to break above, get some pretty significant buying pressure. So all this prior resistance, watch for it to support, pull on any pullback, watch for this area to support. If we break above yesterday's highs with continued momentum, watch for those to retain support because that's the play I love. All right, now it's breaking out. So I'm going to start watching this area to see if it holds on any pullback. And I have to now jump with these levels. All right, now starting to get continuing more broad-based buying pressure. I want to see if we get this spike into 1,000 to 1,200 and then get that pullback, how these levels hold in the S&P. So that's what's going to be key for me. Let me just peek in at the NASDAQ, then I will jump. NASDAQ well above yesterday's high, so your key is 11.5. You don't want to see a trade back below 11.5 is major support. So watch for that tick pullback and then watch if these support levels hold. Hey, Legion. We'll have to do that. I can probably touch on that given the time either this afternoon or we can definitely touch on it this week. Just remind me if I don't get to it. So now we're getting the pullback. I'm just checking out Dow, which is really lagging. Dow's been leading the last few days and now turning into a laggard. All right, now we watch. So, not a decisive break, because remember, close is most important. Could not close above the highs. Now I'm going to watch. We should be getting the pullback. Just a little lesson here. So I'm watching for this tick pullback. Could not get into the 1,000 range. So this now I'm watching for my key support with the S&P to see if we break below 3807 is going to be my first warning sign. If this does not hold, this could be the suck in play and the quick reversal. Then I will lean to go to more choppy mode. If this holds and we get a successful retest, then I'm staying in choppy bullish. If it breaks, then it will go to choppy neutral. If we start breaking down below about 3804, choppy bearish. All right, sorry I did not get to all the comments today. Thank you. Sometimes I just can't with everything we have going on, but thank you everybody for attending. Hopefully Bob can join us again this afternoon. Again, so far you've seen this is a successful retest with the bounce against resistance becoming support. This is exactly the kind of stuff you're looking at, and we jumped to the tick, and you see we didn't even get that pullback to zero yet. That's why I set an alarm there. So right now, we're still in bullish mode. This is how, if you're intraday playing, if you're not worrying about these short-term moves, then this is just information for you to see how it's real-time on the fly analysis using multiple things, and then I scan through. Like I'll double check. See, the NASDAQ didn't even pull back to the breakout level. NASDAQ didn't even pull back to this key level. So now it's stayed up longer. So I'm going to focus mostly with rally today on the S&P and NASDAQ. I have my NASDAQ key about 11,515 and the S&P key, which did pull back to key support, so far holding above it, but S&P is still not super confirming it just yet. Pausing up here, the longer it pauses up here, then we get the push higher. It's a nice breakout play. I will talk to everyone later. You are welcome, Christoph. You are welcome, Andrea. You are welcome, Legion. Thank you for joining, Crystal. If I missed your comment, I'm very sorry. I will chat with you later today. Bye for now.